Hello, my name is Anthony Goring. I'm the investment associate here at Vance Wealth, and today we're going to be talking about asset allocation optimization. Now, what is asset allocation optimization? It's a lot of big words. What does it mean? Well, thankfully, it's fairly simple. Generally, it's referred to as a strategy used by investors to make informed decisions about how to distribute their money among different types of investments. It involves carefully selecting a mix of asset classes such as stocks, bonds, and cash equivalents based on individual goals, risk tolerance, and market conditions. The primary goal of asset allocation optimization is to maximize returns, minimize risk, and do so through the selection of investments. Properly diversifying investments across different asset classes can potentially reduce the impact of short-term volatility on the portfolio. This is because different asset classes perform differently under varying economic conditions. For example, stocks might be doing well, bonds not so well, or vice versa. To determine the optimal asset allocation, it's important to consider your long-term financial goals and your risk tolerance, right? And so what is financial goals? What objectives are generally considered? Well, retirement planning, purchasing a home, education expenses, those are the kind of things that come into play. And then on the risk tolerance side, well, high or low? Are you a higher risk tolerance? Do you have maybe a longer time horizon, the ability to stomach market fluctuations? Do you have a lower risk tolerance and maybe a shorter time horizon, the need for stability? These are all things that come into the optimal asset allocation conversation. And by considering all these, your advisor can help you determine what that is. Now, what does that mean for us? How do we put that in today's terms, right? Well, let's look at the current economic conditions. Right now, what probably sticks out is the high interest rates. We've been used for the last over a decade to low interest rates, ultra low, near zero. Well, now some of those fixed income investments that were paying 0.5% are now paying closer to 5%. So a new retiree who just a few years ago may have needed a higher allocation to growth or stocks and more risky assets to meet their income needs and their cash needs. Well, now they can take away some of that risk, take it off the table, put it into those fixed income assets that are actually generating income now and still live properly, still live to their fullest. And so as market conditions continue to evolve, it's important to keep an eye on this and the relationship between your portfolio and your optimal asset allocation. If you feel like you don't have a proper asset allocation and it's not being optimized, please reach out to us. We will do our best to help you. We don't charge for our discovery or our clarity meeting. Come into our office so we can schedule a Zoom meeting and we'll see what we can do to help you out. Thank you. Have a great night.